What's up, everybody? Tuesday, September 16th. Had a little bit of a correction today, but I was expecting that because we had tax strain yesterday. Actually, the last 3 days. That's Thursday of last week, Friday of last week, and yesterday. That was a 98.5 billion drain. So that's a little bit less than, well, it's quite a bit less so far than what we saw last year at this time. Last year at this time, the drain was about 130 billion. So the 98.5 billion now puts the balance, that's a positive balance to the government side this month of, I think it's like 44.5 billion or something like that. In other words, the way you're going to hear this in the media, or, when economists talk about it, they'll say government surplus. I don't use those terms, surplus, deficit. I say balance. So that's a positive balance to the government's account. Now 44 billion, and a net transfer from us, from the economy, 98.5 billion. So you see what happens with these flows is that in tax drain, the balances of the non-government, the economy, they go down. The government's balances go up. So there's a temporary situation where non-government balances are reduced. So normally in that circumstance, there's less buying power for the market. This is a temporary thing. We see this every year. September tax drain, there's another small tax drain that comes in October. November has another quarterly interest payment. That's when we get those big spikes in spending flows and leading flows and net transfers. So you could see how this all plays into these periodic cycles. But the main thing, like I've been saying over and over, it's very hard. It's very hard to damage or slow down an economy, or stall an economy for that matter, when the government's spending almost 8 trillion annually with net transfers of almost 2 trillion. I mean, these are astronomical numbers. Okay, and when I see people out there talking about how the market's going to crash, or, we're going to go in a recession, it's just not going to happen with these kind of numbers. Now, yeah, you're going to get your normal pullbacks in the market and risk assets. But as long as these flows remain at levels that we're seeing right now, there's no way that you can construct some kind of a sustained bearish environment. It's just not going to happen. It's not going to happen. I mean, when you're flooding an area with massive volumes of water, and then you go around telling people this is going to be a desert any day now, and there's massive volumes of water flooding this area, you would just look at that person and say, are you nuts? Are you crazy? There's no way, unless that water stops, or at least diminishes somewhat, there's no way that's going to become a desert. It's very simple. Okay, so you know how I am. I hear that stuff. Number one, I don't pay attention, or if I do pay attention, I'll take a little note, mental note saying, all right, that's more evidence right there that it's going to keep on going. Because you have, and we see this in the sentiment data that I see every week. If you look at the AAII weekly sentiment survey, even if you look at the put-call ratio, I mean, the AAII survey is really something, because over the last few weeks, that has gotten individual investors have gotten really bearish, and have really, really reduced their, the bullish position. So when I look at that, And I connect that with the reality of what the fiscal flows are. I mean, you don't have to be a genius to realize that this thing is just going to go up. And any sort of a correction you get off of a tax drain like what we had over the last 3 days, and maybe, there could be a couple more days of that tax drain as it trickles in. Maybe we get closer to that 130 billion that we saw last year. But by the way, tomorrow is Wednesday. That's a Social Security payment. So, I mean, today, this little tiny pullback that we had today, that was probably your opportunity to buy. And I had some orders that were resting limit orders in stocks that, I've been building a position. They got filled. I've explained this in the past. I like fishing. I talk about it all the time. And the way I go about my stock selection, well, I know what companies I want to, I want to own, and I do that selection based on value. I do that selection based on my macro outlook. But then once I come to, what stocks I want to own, I put out limit orders at prices below where those stocks are trading. Like, the analogy I use is the fishing analogy. I bait my hook. I got several different, rods. I let the lines out and I leave them there, hanging out. Maybe having a beer, maybe just relaxing. When they get hit, they get hit. If they don't get hit, they don't get hit. I don't worry about it. But I buy at my price. I never chase after the market. I never, ever chase after price. And it's something when I used to teach my Forex course, that was one of the main things that I taught is you never chase, never, ever chase. And that serves two purposes, okay? That instills a discipline. I mean, you get a price that reflects your analysis and where you think is the best entry level and the best value. And it also instills a discipline in you. If you don't chase, then that means you're in control of your emotions. And even if you have that feeling, that desire, like, man, the FOMO, fear of missing out, it forces you to suppress that. Okay? It forces you to bring that under control. This is like mental exercise. It's like going to the gym and lifting weights. You start out with a light weight, you build your strength up, you add weight over time, you get stronger, you get bigger, you get stronger. This is mental working out. When you're in that situation where you feel agitated and, I got to do this, I can't stand it anymore, fear of missing out, FOMO. No, you got to stick to that rule. You never chase, and you have to kind of embrace an attitude that, hey, if I miss this, that's okay. Another opportunity will come along. Something else will come along. It took me a very long time in my career to learn that, to understand that. I used to think, like, if I didn't get this one thing, if I didn't get that one trade, if I didn't get that one price, that was it. I'll never see something again like that in my life. I mean, I've seen so much. I've been in this business for so many years, like 5 decades, man. I've seen so much. And in the beginning, it was always like that. I was not able to control my emotions. I would end up chasing. And that would always put me in a bad position. And then I would end up getting out, because immediately as I got in a bad position, what do you think happened? It will go against me immediately. And then I would be like, why did I do that? I got to get out. And as soon as I got out, it went back in the way that I thought it was going to go in. I chased it again. And then what happened? What do you think happened? It went back the other way. And what does that do to your confidence? What does that do to your discipline? It throws it completely out the window. It shatters it. You have none. You are operating as some kind of out of control, emotional person. The market will eat you up and spit you out all day long if you operate in that fashion. I never, ever, ever worry about missing something right now. And I'm 68 years old. Like a lot of you probably, you're young. You got your whole life ahead of you. Like there's going to be so much opportunity. So much opportunity. I mean, if you get all bent out of shape because you miss one thing and you feel like, here's a classic example, which I think a lot of you you may be wrestling with this right now. Oh, why didn't I buy gold? Look at gold at $3,700. First of all, if you followed me back in 2022 when it was $1,600 an ounce, I was literally pounding the table saying, you gotta buy gold, you gotta buy gold. The gold producers had the smallest short position in gold futures in history ever. They were so freaked, and that's like being bullish for them, screaming from the rooftops, okay? And the Fed was about to raise interest rates, or they started in March 2022, and I said they're going to raise interest rates, and it's going to end up being a fiscal bonanza. It's going to transfer so much interest income into the economy. The economy is going to boom. Inflation's not going to come down very much based on that interest rate policy. And you got to buy nobody. Now it's 3,700. And I know there's people out there. I get emails like, you think I should buy gold? And I see this in comments and articles online like, now's the time you got to buy gold. I'm saying it's going to be the opposite. So you got to control your emotions. If you feel that this gold thing has gotten away from you and you're kicking yourself and you're beating yourself up, don't do that. Don't do that. You'll have opportunities. Believe me. Believe me when I tell you, you'll have opportunities. You definitely don't want to chase. You definitely do not want to chase. You know what I like right now, which nobody's paying attention to, which I've been telling you guys? Treasuries. Treasuries now, for me, the way I see it, are where gold was back in 2022 when it was $1,600 an ounce. Because the Fed's going to be cutting interest rates between the tariffs and now the rate cuts and other things next year, most likely an economic slowdown because of increased fiscal drag, and definitely, I think, problems in the labor market as firms. I've been talking about this. How firms are going to work very, very hard to sustain their profit margins, and the way they're going to do that is slow down on the hiring, maybe layoffs, implementation of AI for more productivity. And I said this the other day. I've been saying this. When Powell made his speech at Jackson Hole back in August, and he said that the Fed's decision function on monetary policy, on rate policy, is now pivoting to the labor market, he set himself up for this. And yesterday I did a whole video on he's going into this rate cut tomorrow, kicking and screaming. He doesn't want to do it. He absolutely does not want to do it because for him, in his egomaniacal mind, he feels that's like caving into Trump. But the market's forcing the Fed to do it now. You know, this is the Fed. I always say this Fed, this Powell Fed, they just do whatever the market says. It's kind of ridiculous that we even have a Fed that operates in that fashion. I always use the analogy. What would John D. Rockefeller of Standard Oil, you think he went around to all his little competitors and asked them, like, where should I price my oil? No, he crushed them. He put them out of business. He was a monopolist. So Powell doesn't want to do it. He's going into this kicking and screaming. He's going to do his press conference. I'm telling you this, folks. He's going to do his press conference tomorrow. And he's going to be very hawkish. He's going to be like, yeah, we gave you this rate cut, But don't start getting it into your head that we're going to keep doing this. And by positioning himself like that, by saying that stuff, he's literally handing to you on a silver platter. He's going to hand to you on a silver platter a wonderful, wonderful buying opportunity in treasuries. Just watch. Just watch. I know how this guy operates. So it's a lot of fun. I'm relaxed. I don't get excited. To me, how I operate in the stock market, because of my understanding of the macro picture and the framework that I use, which is the fiscal flows, and then the actual, the mechanics of how I trade stocks, how I invest, that's fun to me. That's like no pressure, no anxiety. It's fishing. You bait the line, you put it out there, you kick back, and you wait to get filled. And when you get filled, wow, that's great. And it's usually at very, very, very good prices. I make the market pay me. I don't pay the market. Think of it like that. Anyway, folks, that's it for today. Thank you very much for watching. Thank you for subscribing. If you haven't, please do so. On my way to 20,000. It's going to be a long time. But look, this is a very niche channel. I mean, very few people. I'm not mainstream economics. I mean, what I tell you actually is the correct understanding of our monetary system. Those of you who have been here for a long time, I know you've learned a lot. It's very gratifying to me. And I just want to say thanks. And don't forget, go to my website, pitbulleconomics.com. Sign up for a 30-day free trial to MMT Trader. Tomorrow, we'll go over what happened at the Fed meeting. But I'm pretty sure what I'm telling you is how it's going to play out. I'd be shocked, frankly, if it plays out any other way. But we'll see. I've been wrong in the past, but we'll see. All right, have a good evening. Bye.